Hey guys, welcome back to the channel. In today's video, we are going to dive into a Canmore Real Estate Market update for the month of January. So let's dive into the statistics.
Okay, so first of all, we'll do January as a whole. So everything in the market, we will.
And just keep in mind that this is excluding pre-sales. We didn't have any this past month.
Yeah.
No fractional sales. There is one lot, and we will talk about that, but it is separate.
Yeah,
Sorry to cut you off.
we're going to separate the lots out because it just throws off the days on the market. So let's get into January market update. So at the end of the month, we had 85 active listings, 36 new listings, 29 units sold. The average list price was $1,029,000 and change. The average sale price was just over $1 million. The average sold to ask ratio was 97%. The average price per square foot was $810. The average days on the market were 73, and the average month's supply were 1.96, so near 2 months supply.
Moving into the one lot that sold, it had an average list price of $1.395 million and an average sale price of $1.3 million. I shouldn't say average, a sale price. The sold to ask ratio for that property was 93%, and it sat on the market for 232 days. So sometimes we do see that with lots, is they can sit for a little bit of a longer period, but
it takes a specific kind of buyer,
Totally.
right? I mean, somebody that's willing to look, near 2 years out to do a build, getting development permits, all those things take time in the town of Canmore. So it is very specific for sure.
Now we'll dive into specific property types. Apartments, we had 5 sales for the month of January. The average list price for those apartments was coming in at $842,000 and change. The sale price was $828,000 and change. The average sold to ask ratio was 99%. Average price per square foot for those apartments was $756, and they sat for about an average of 80 days on the market to sale.
Yeah, so just over what the average was for the whole market.
Yeah.
So let's get into townhouses. So we had 8 units sell in the month of January. $915,000 was the average list price. The average sale price was $884,000 and change. Sold to ask ratio was 97%. Average square foot price was $688, and the average days was a little bit higher than the apartments at 87.
Single family homes, we saw 6 sales in the month of January for an average list price of just over $1.6 million. The average sale price was just over $1.5 million, giving a sold to ask ratio of around 95%. The average price per square foot, this was our highest average price per square foot for residential style properties, was $831, and the average days on the market was 91.
Let's talk about duplexes. We had 1 sell for $1.245 million was the list price, and the sale price was $1,180. 95% sold to ask ratio, again the same as the single family. $599 per square foot was the square foot price on that particular half duplex, and the average days on the market were, well, it took 18 days to sell. So very interesting on the sold to ask. Single family and half duplex tend to maybe have a bit of a discount in their sold to ask ratio of 95%. Now we did look before the video here, and it's right seeming to be in line with what happened last month. I mean, a percent here or there difference. So just something to watch. And we'll talk about that when we kind of wrap up the video, what's going on and pricing and those types of things. So
I just found it interesting with that half duplex with a 95 sold to ask ratio, which, like we've just touched on, is kind of on par for these half duplexes, but 18 days, so that's pretty quick. So, obviously the sellers, perhaps got an unconditional offer.
right.
And possession was quick.
And pricing was probably correct, right?
Yeah, exactly. So, it was a quick sale, very desirable for a seller, and who knows what that seller had going on, if they were getting into another property or,
Could be
those
lots of
cash
factors.
offers are valuable.
Yeah, Could be lots of factors for sure.
We'll dive into the short-term rental stuff here. We'll talk about hotel condo specifically first. We had 5 sales for January for an average list price of $814,000. The average sale price was coming in at just shy of $819,000. Sold to ask ratio 101%. Average price per square foot was coming in at $1,100 a foot. And the days on market were 70. So like we touched on in our past market updates, keep in mind that the hotel condos will have the GST inclusive of that. So we're kind of seeing that 101%, maybe a little bit less. But do you want to dive into tourist homes?
Yeah, so the tourist homes, we had 3 sell in the month of January for $781,000 was the list price. Sale price was $809, and again, we're talking about usually GST added to these. So you know, the numbers look higher, 104% of sold to ask. $919 a square foot. So we're seeing, you know, 1,000 in the hotel condo and, you know, 900 in the tourist home, and then 31 days on the market. So tourist homes tend to move a little bit quicker than the hotel condos, but the average price per square foot isn't typically as high. So,
and I think the reason why they move a little bit quicker is because naturally we just have less of them. Now I'm curious on your opinion on what you think of why that price per square foot is a little bit less, because realistically, for the most part, they're kind of the same property as a hotel condo.
Yeah, I think the fact that the town is talking about getting rid of that particular type of zoning. We don't yet know what that looks like. There's been, you know, some different things come out that this is what it could be and this is what it could be. So we're just kind of, I guess, guessing at this point.
Yeah. What do you think the town will do?
Well, I do. That's a great question. I think the town is going to not provide any more tourist homes in Canmore. We will strictly be the hotel zoning, one short-term type rental property. My opinion would be that they would continue to honor the existing tourist home unless those people decided to switch it to residential, in which case it wouldn't be able to be switched back to tourist home. That's what I think will happen. But again, I mean, who knows what the town decides and how that unfolds. I just really think that they're looking at going away from that particular type of zoning, and that might be why the average price per square foot is that, because typically we would see that higher because of the flexibility within the tourist home. And if you need some information on those 2 types of zonings, we have a video. Go check it out. It explains them in detail of the difference. So if you're on this, you know, if you're looking at this market update going, what is tourist home and what is hotel condo, check that video out, because it'll give you a really good idea, or reach out to us. We can fill you in.
Yeah. Okay, so that wraps up the specific property types. I would definitely agree with you on your take on the tourist homes, that I think that's what will transpire. But again, everything is super up in the air. Nobody really knows. So let's dive into maybe a synopsis of what we've seen in the market over January, maybe where we're anticipating it going. I think we kind of have 3 key points. Number 1, I would say that pricing matters for both the buyer avatar and the seller. And the reason why that is sellers, they can't chase the market right now. It doesn't work. If you're pricing too high, your days on the market are increasing, and it ultimately is not going to sell. And we've seen that with maybe some listings going expired or canceled or whatnot.
And sorry to cut you off, but what else happens there is if you price correctly in the market, okay, and maybe you need one price adjustment or whatever, you will typically sell where things are selling. If you overprice, you end up pricing down in the market. You're on for longer than you should be, and you actually get more or less than if you would have priced correctly. I've seen that so many times in the life of my real estate career, where people think, I'm going to chase this a little bit, and they tend to ask for too much, and then we price down, price down, and then all of a sudden they're getting less than if they would have just priced correctly off the start.
So connect with us, because we make sure that we give people a proper estimate value on their properties, and don't overprice your homes. It's not a good thing for the realtor. It's not a good thing for the client.
No.
Especially the client. And in the end, you're probably not going to get the outcome that you're hoping
That
for.
you desire, for sure.
Then on the alternative side, as a buyer, they're becoming more educated on the market. They're not overpaying. But what we are seeing is that, and this is positive for the seller side as well, is that there's still a demand. We're still seeing people want to get into these properties, whether that's residential or short-term rental, but nobody's overpaying. People are educated, people are being smart. Part of that's interest rates, part of that's just the market in general, and lack of inventory.
Right? Lack of inventory can work two ways. It can work for the seller's advantage if interest rates are low.
Yeah.
If interest rates are high, lack of inventory can actually be good for the sellers because it keeps properties at a good value.
Yeah.
And being that we're 1.96 or 2 months of inventory, that means we're low inventory.
Yeah.
Now we have been climbing, if we look at over the last 3 years in January, I think we're 57, 74, and now 85.
Yeah.
So we have been climbing year over year in our active inventory, but we're definitely lower than the 5-year average of 104.
Correct.
So, I mean, from a buyer's perspective, when you have less inventory, if interest rates are low, it drives prices up and it's hard for buyers. But when interest rates are the way they are, buyers can tend to be a little bit more, I don't like the word picky, but a little bit more savvy in what they're doing. And so buyers are definitely can take advantage of the pricing.
And then that kind of correlates to just emphasizing on the fact that as a buyer, you can be as educated as possible. A price or a home could be listed for, could be overpriced, but there's not really any deals.
No.
There's not anything where you're going, oh, this is awesome. I'm getting in at under market value. This is great.
Yeah.
That doesn't really exist.
Doesn't happen in Canmore very often.
Yeah, it doesn't happen on a
one-offs.
whole, but I don't want people to think that because these average sold to ask ratios are down and days on market are up, that's clearly and evidently happening in our market, because it's not the case.
It's not, definitely.
Number 2, 11 price changes. What's your opinion on that?
Well, that's 13% of the listings. So typically what we see in that is overpricing. Not always. Sometimes, you like to be able to, especially in this market where you're not quite sure where you're at, sellers like to try and get a little bit. So depending on the price changes, how many of that 13% is that their second price change?
Yeah.
So, I mean, but 13% of the listings are, changing their price.
Yeah.
So, that definitely bodes well for the buyers as well. And it just goes to show that sellers need to really sharpen the pencil and look at what their price is and go, what's my end goal?
100%.
What do I need to have happen? Do I have to move, or do I need to sell to buy this?
Yeah.
So there's different factors for everybody, and knowing your motivation when you're going to sell is really key.
It's a key statistic that just reiterates point number 1 of the fact that pricing matters.
100%.
And number 3 in our synopsis, 5 listings came back to market. So that's 6% of our total listings for the month. Whether they fell through via inspection or financing or condo review, I have a feeling we are both on the same page as to why they're probably falling through. But that's an interesting statistic, because we don't necessarily see, or in the past, especially during COVID, we didn't see that happening very much.
No.
What's your take on the reasoning? I mean, I personally think it's financing, but...
I'm with you. Financing, things are harder. People are stretched. They have to qualify at 2 points over what the rate is. And, so that's where it's important to connect with a realtor who is connected with a mortgage specialist or broker. or 1 or 2 or 3 of them, and or if you have your own, get a pre-approval. And the pre-approval isn't go into the bank and then look and go, I think. It's an actual, debt to equity service pre-approval where they go, here's what you can afford. And then look at those types of properties, because overstretching to get, I want this, it only breaks your heart as a buyer, and then it's really tough on
it wastes
the market.
Wastes your time.
It does. It does. It wastes your time for sure. And it's very hard in a market like Canmore because prices are typically higher than everywhere else. So I think it's just important to have your financing 100% in order.
Agreed.
So when you're doing financing, what you should know is I can afford this. So when you go in, you can afford this. The financing clause is to make sure that the house meets the bank or financial institutions standards and requirements. So that's the type of financing approval that you're looking for.
For sure. And the benefit of doing that is when you do write an offer and you do have a financing condition, you're not pressed against the wall going, oh my goodness, am I going to be able to afford this? Or it's coming down to the 9th, 10th hour here and my bank still hasn't got back to me. So it allows you to go through that process at a comfortable pace in your condition period and not stress about it.
Yeah, because we want this experience to be fun. I mean, typically this is one of people's biggest investments. We want them to enjoy the process and be happy and excited and confident going into what they're purchasing. So being prepared is really important.
For sure. Now, as far as kind of where we think the market's going, I think we're just staying at a pretty steady rate right now. I mean, typically we usually see the spring and summer increase the demand and we see more inventory at that time a little bit. But I mean, looking back at last year as a whole, we saw 11% growth. I think that's a great number. I think that's a sustainable number. And so I think that we're at a point right now where things are just going well for both sides of the table.
Yeah, if you're looking at if you bought last year and you're going, I'm going to sell and get a big gain, that's not the case. It's not like it was back in COVID where,
prices changed a lot in the year.
It was really crazy what was going on. We are more in a balanced market, like we keep talking about in the last 4 or 5 market updates, and I think I just see that being sustained. Moving forward.
Awesome.
Yeah.
Well, we'd love to hear you guys' comments. If you guys have any of your own opinions or comments on the statistics that we've provided, we'd absolutely love to hear from you. If you guys have questions about buying or selling or what the market's doing, or you want more information or even know how we calculate our statistics, reach out. We'd absolutely love to connect with you. And while you're here, if you could just smash that like button, it really does help us grow and get this out to more people who can benefit from it. So we look forward to coming at you with our February update soon. Take care.